About 5-6 days after the halving, how are things standing for Bitcoin? Hi, I'm Adrian for Bitcoin for Beginners. In this series, What's Up Bitcoin, we will explore major events and developments that impact Bitcoin, which the Bitcoin halving obviously is. Let's dive into some various charts to see what's happening with Bitcoin in this new era after the halving, and if we can find any clues about what to expect moving forward. First of all, many of you may have already seen it, but for the record I wanted to mention it anyway. The last block of the 12.5 Bitcoin reward era contained an epic message, which was included by the miner that mined block number 629,999. It included this headline: New York Times 9 April 2020, with $2.3 trillion injection, Fed's plan exceeds its 2008 rescue. This is a reference to the newspaper headline as you can see here. The events on a global and financial world stage currently at the time of this Bitcoin halving have a lot of parallels with the time that Satoshi mined the first Bitcoin Genesis block in 2009, when the world was in the middle of the financial crisis. And he included this news headline in that first Genesis block. Especially in times of extraordinary quantitative easing, Bitcoin's quantitative hardening in the form of its halving events make Bitcoin particularly stand out as hard money. Over time we'll find out if the rest of the world is going to agree with that. Before we continue and dive in the various charts of past week, I wanted to ask you, if so far you like the content, support us by liking this video and additionally subscribe. This helps our channel a lot. One of the charts that we looked at in our analysis in my last video before the halving was that of the hash rate. And as we explained about hash rate is that this metric represents the computer power that is committed to the network by the miners, and also represents one of the measures of security against attacks. If we look at the hash rate of past week, we can see that the hash rate's all-time high occurred on the day of the halving, but has been in a downtrend ever since, which at least for now looks like some miners are switching off their machines since they lost 50% of their revenue since the halving. On a larger time frame, we can even see that we are nearly approaching the 6-month hash rate low, because large drops in hash rate and large price drops often go hand in hand, which also happened after the previous halving. Could this trend of the hash rate indicate, if it continues, that the price may follow soon? Not unlikely, so it seems a good idea to closely monitor how the hash rate develops further. If you want to know more details of what the implications have been at the last halving and some of my projections into the midterm after the halving, you can watch my last pre-halving update. A link will appear in the corner of the screen. Also, it's going to appear as suggestion at the end of today's video. Because a drop in hash rate at the same difficulty level for solving and mining new blocks might affect the average block time, we can look at this chart to see if that's the case. And indeed, we can see an increase of the average block interval around about since the halving happened. The average time between each mined block increased with around 50%. Another interesting chart to look at is that of unconfirmed transactions in the mempool. All new transactions that are broadcasted over the network first land in the so-called mempool, waiting to be picked by the miners who will include them in the next blocks they mine. The size of this pool varies over time. Sometimes there is a big backlog, and when less new transactions are coming in, the mempool can also clear. The colors you see here represent the fees that users have paid for their transactions, and those in the higher ranges are going to be included in blocks first, before the lower fee transactions, like those in the blue area. At the time of the halving, the mempool was fairly empty, cleared easily, and transaction fees were rather low. Spikes like these are not uncommon, which indicates peak and low hours for transaction processing. However, the last few days, transaction volume and the backlog have been exploding, and average fees as well. Although since today, some of the pressure has been taken off, which seems to indicate there is an increased use of the network. More network traffic and longer block intervals could lead to more backlog in the mempool and higher fees, if indeed less transactions can be processed per hour. If you need to transact but have some patience and don't need your transactions to be confirmed in the next block, you can still transact for fairly low fees and just wait until the mempool clears up a little at low volume hours. The most optimal fees seem to be in the green zone at the moment. But this strong increase of the mempool size is something to be mindful of, because it could indicate more trading related user activity or clogging of the network due to longer processing times, or a combination of both. The next important metric that could give us clues about changes in the Bitcoin market after the halving is the famous Google Trends chart. If we look at a year overview, clearly we can see more interest for the term buy Bitcoin since early May, the weeks leading up to the halving. However, if we look at the bigger picture over the past 5 years, the current small spike is still nothing compared with the raging 2017 bull market that you see here. This means we can safely say it is still very early before we really get in bullish territory. So it seems as if there is still time for those that want to accumulate some more Bitcoin for the time being. But if you plan to do so already, I wouldn't postpone it too much either, because with Bitcoin you never know exactly when it takes off. Just to take a look at the Google Trends of the past week, it does seem that interest is slightly dying out, which is not entirely unexpected as the halving hype is now already behind us. You can see here this small last peak around the time of the halving. Halving related interest seems to be going down, so unless other events bring back the interest, I would see the downtrend continue its path further. And finally, we can take a look at the price charts. Here you see the 4-hour candle in which the halving took place. The hours around the halving there was some heavier volatility in both directions, though shortly after the price at least stabilized a little. However, because on the previous day a large drop in price had happened, and because that happened in the weekend, it had reportedly caused the largest gap in the futures prices, because those stopped trading over the weekend. As a result, they opened with a huge gap. The theory has always been that in most cases price gaps of CME Bitcoin futures after the weekends tend to be filled in the week following that gap. This is what some analysts were expecting, apart from whatever the halving might be bringing. And this time that actually happened, quite precisely in fact. After the gap filled, since then the price has been sliding back at least somewhat for the time being. To wrap it all up, so far my mind hasn't been really changed since my last pre-halving update. If Hashrate indeed keeps on dropping, I think things will pretty much play out more or less in parallel with the previous halving, at least in the near foreseeable future. So I do see the potentiality of a shorter term price correction as still on the table, at least as long as inefficient and unprofitable miners continue to switch off their machines. Of course, not any of this should be taken as investment advice. You and you alone are responsible for the decisions you make with your own money. Important that you do your own research and due diligence. Last thought that I want to share with you is one that I borrowed from YouTuber Tone Vase. Whatever happens, you are responsible to have your plan in place for what you will do in the event of Bitcoin being 100,000 tomorrow, as well as a plan for if it is 1,000 tomorrow or in the near future. And decisions you make today should be made with both of those scenarios in mind. That's about all. Don't forget to give this video a like, it helps us a lot. Also follow our channel by subscribing for more of our episodes. If you have done that already, watch one of our other videos that are appearing here. See you all next time.